Okay, so welcome to you all. We start our first session today, and we start our fundamental accounting concepts. If you ask me that what are our topic objectives, let me check the volume if everything is fine. Yeah, it's fine. So the basic idea behind this topic is that we will be having some first-hand encounter with the fundamental terminology that we use in the field of accounting and finance. So in particular, it's always maybe it's my problem, if you can say so, but I always want to add the business vocabulary of my students. So we'll be studying many new terms, which some of you might have listened before, but maybe for some they would be totally new. The core concepts also we shall go through, and then we will have the relevance of recording economic activities. Why do we record? What don't we touch about it? And how these economic activities on the corporate recording of the impact on the companies. I think yesterday when we had our preliminary meeting, I told you that the modern day corporates are massive. They are huge. Yeah. So we were discussing yesterday that the modern day companies are very big. They're huge. And there is a survey in 2018 which shows that if you make a queue of the world's top 100 economic entities or the revenue collectors, there are 29 countries and 71 are the companies. So in many cases, the countries are less relevant in terms of economic angle in comparison to the companies. And here is the list we have. All the black ones are the countries and the red one are the companies. So you can see that the revenue of United States is the highest, followed by China, Japan, Germany, so on.
Shab, I'm sorry to disturb you, but it's kind of a problem. You're not sharing the screen. Where I can see the online presentation.
All right, I can do it.
Me personally, I don't know about.
Yeah, can you see now?
Yeah, thank you very much.
Thanks for reminding me. I thought that maybe it shows automatically, but it doesn't. I'll be careful. Thanks for reminding me. So you can see here that there's a list of world's top 100 entities. And 29 are countries and rest 71 are the corporates. Like for example, interestingly, Royal Dutch Shell is bigger than Sweden. And Canada is marginally bigger than Walmart. And Walmart is bigger than Spain. I'm not sure where is Finland, but let's check. It's here, 128th. So for example, you can say that the Agricultural Bank of China is bigger than Finland. So big are these entities. So that is why, like in the country, we have always been studying in macroeconomics that we need to calculate the country's success, growth, wealth, GDP, GNP, and we use all the possible techniques to calculate them. So is vital to calculate, to enumerate the wealth, the assets, the liabilities, the revenue, the profits, the losses, investments of the company, if they are so big. And just because they're so big, we can't ignore recording their transactions. Look at the sheer scale. USA revenue, 33,300 63 billion. So would you call it 3.3 trillion? Massive scale, isn't it? So that shows that the countries are so big. So we need to keep the record of these transactions. I go back to the. So before I go to the accounting, if the countries are so big and the companies are so big, what is the comparison between the two? If you see, for example, Great Britain, and if you see BP, British Petroleum, so Great Britain is a country and BP is a company, British Petroleum, so it belongs to Great Britain. If you look at the institutional side, the structure of the country, the government, and if you look at the structure of the company, what similar or dissimilar you may find? It's my question to you.
They both have a person who is in charge of all this, the country or the company.
Okay, very good. It means that if I want to share with you a Word file, for example, can you see the empty Word file?
Yes.
So if I, for example, make a table here, and here is Britain, and here is BP. And Lisa, did you say that Britain has what?
I said that both the country and the company, they both have a person who is in charge, who is responsible for all this.
So who is responsible in Britain?
Like the Prime Minister.
The Prime Minister. And who's responsible in BP? Who's the parallel equivalent?
Like the CEO of this company.
Good. In some countries, we have presidents. Do we? Of course, Britain doesn't have president because it's a parliamentarian democracy, yeah, right? But what would be the equivalent of president in a company? Any idea?
Director board?
The board of
founder, yeah, founder company maybe.
Founder or we can call it chairperson.
Yeah.
And even the president is also, in some companies, this word is not an exception. And is it Shiny who said the board of directors, right?
Yes, Chair.
Okay, so it means that in the companies, in the country, we have the parliament. Do we? Where all the political and all the main decisions are taken. And then the equivalent of this is board of directors. True?
Yeah, I can also can see some similarity. There are some special budgets and development goals.
Yeah, so there is a budget. There is all the things, there's a budget, there is a policy, there is a planning. How can a country run without a plan? And there is a strategy also, by the way.
Yeah, kind of development plan.
And same thing happens in the company. Which company doesn't have the budget? Which company doesn't have policy planning and strategy? The company will not survive. Anything else? If you can find some comparison.
Maybe some companies, I'm sorry, maybe in some companies can be hierarchy, and in government should be hierarchy straight. Who will be the most responsible person for almost everything.
Very good. So it could be possible. I shouldn't call it Britain. Let's call it a country or a republic or whatever. Britain is not a republic. So there could be hierarchy, if it is a autocracy or a dictatorship, but the similar dictatorship can also be in the company. So you can see that the companies can also have some ownership rights that some people they never give ownership rights to anybody else.
Also laws.
Sorry?
Law.
The law.
The
Yeah.
law, yeah.
So there is a constitution. Can I call it constitution?
Yeah, yeah.
And what is the constitution in a company?
Maybe some internal rules of the company.
We can call it
Rules and yes.
articles of association, something, rules and regulation. That's a kind of word which we commonly use, articles of association. What else?
Can positions be also there, like the roles which people perform?
Can you name a few?
I mean, for a company, it can be a manager or
Yeah.
The CEO, as we mentioned, and in a country, it's prime minister,
Yeah.
as well, other heads.
Yes. So in a country, you can have the finance minister, and the equivalent of the finance minister in a company would be CFO, the chief financial officer.
Also, every country has citizens, and in the company, it can be like customers.
So you have the citizens. And what do you have in the company then?
Customers.
Just customers.
Employees.
Just employees.
Expertise.
Sorry?
The foreign employees.
Okay, just employees, just customers.
Consumers.
Just consumers.
Shareholders.
Investors.
Just shareholders.
All the people who are visiting this company.
Just the visitors. Come on. Stakeholders. Whosoever have stake in the company.
Property. The property.
Yeah, so the stakeholders could be the customers or the consumers, yeah. Then it can be employees, very well said. It can be investors. Investors can be shareholders and debt holders. I'll come back to this point. And then somebody else said something. How about
the property?
Property?
Yeah.
What do you mean property?
I mean, country and like some company can have some property.
Oh yeah, the assets. Okay.
Yeah.
Oh yeah, but that's a different point. I just want to have some more discussion about it.
Visitors.
Visitors.
Just some people who try to observe some companies or maybe kind of a tourist, but may try to find something new.
Like citizens also, there are some residents. Then there are some visitors, like, if you're a football player from Italy and you're living in Britain, you're playing for Chelsea, so you might be there for 6 months, 9 months, something like that. So same way you can. Sorry?
Expats.
Yeah, expats. Okay, the foreigners.
How about the service providers for a company?
Good point. Can I call them suppliers?
Yes. Yeah,
because the reason I'm using the word supplier is that a company can require the raw material which is transformed in the factory, but the company can also have a internet services. So both are suppliers, isn't it?
Yes.
So if you use the word supplier, then it's a bigger term, including the service providers and all that people. Somebody said that the company have some property, the country have the The company has the, what is the word, wealth or something? Something like
Assets.
yeah. So the company has its GDP, the gross domestic product, and the company has the assets. Is it?
Yeah.
Yeah. Any other comparison between the two?
Maybe executional law or executional part of the company. In company, executional part can be some people, some kind of managers, and in the country, executional law is kind of some spheres which are controlled by the government. Maybe kind of policymakers or something like that.
That's a good point. If you look at the parliament in Britain, how many of you are aware of British Parliament? The British Parliament has two houses. There is if you see the British Parliament, you will see that there is a group of people who living right in the bottom, and then there is people who are like sitting in the gallery. They call it House of Commons and House of Lords. And similarly, in the board of directors, you have two sections, like in the parliament. We have the executive directors, executive board. This include all and here in the House of Commons, we have the politicians who are elected, who are ministers, like Minister of Defense, Minister of Trade, Minister of Finance, Minister of Culture, and all that people. Whereas here in the executive board of the company, which is a parallel to House of Commons, is the CFO, CEO, Chief Marketing Officer. If it is a BP like companies which require a lot of health and safety risk, there can be Chief Security Officer. If it is an IT oriented company, then you can have a Chief Information Officer, etc. But at the same time, you have a House of Lords in the country. House of Lords are those people who are not actually elected, but they are nominated because of their achievements in the life. It could be even a kind of some very famous movie star. It can be some top business person. It can be some top sports person. It can be some top legal luminary. It can be some retired university professor. Because of their experience before, because of their such a long, deep network of people, and their name is so important. They have their own brand name in the society, if not in the market. That is called House of Lords, people who are given lordship. And the main idea is that they are keeping a check on these people, executive. These people often keep a check that if these people who are running the show, who are running the country, do they behave themselves? Similarly, in a country, we have the non-executive board of directors. These are, once again, people who are not working for the company 9 to 5. They're not full-time salaried. These people who I named, CFO, CEO, CMO, CSO, all those titles whose titles start with the C, capital C, chief. They are the full-time employees of the company. They are paid salaries. They are getting huge amount of bonuses. And they are the employees, basically, let's put it this way. But these are the people they're not the employees of the company. They only visit the company if the need be, if there's a meeting. And they are also keeping a check and the balances on the company. So imagine the company is Finnair. Then in the board of directors of Finnair, there could be some non-executive director from Nokia who is now retired from Nokia. Okay, very mature, very well learned, very experienced, and this person's presence in the board of Finnair ensures two things. First of all, the CEO of Finnair cannot do anything whatever he or she wishes to, because the CEO of Finnair would be aware that if they do something wrong, there are equally or even more capable people sitting, they would catch them. So these people would keep a check on the actions of these people. Executives, the non-executive would keep a check on the actions of executive. And the second thing these non-executives would do, that in case these people have anything to ask, any question, any trouble, any confusion, they find themselves unable to handle the situation, then they can go to these wiser people, this old, wise sage. They would come. And because they have a huge amount of experience in their professional life in different capacities, then people would be in a situation to guide them. Similar way, if the ministers or the parliamentarian who are executive, who are elected, if they have a problem, they can also consult the House of Lords. Britain has a problem. Should it change the value of its currency against US dollar? And the politicians are not very sure about it. The Minister of Finance is not sure about, Rishi is not sure about it. Then he and his team can approach somebody in the House of Lords who has worked as a banker, a CFO or a chief executive officer in his previous life in Royal Bank of Scotland or Barclay. Yeah. So people can approach and they can provide them guidance. So there is you can see that, as you guys were telling me, because the companies are so big that they are sometimes bigger than the countries, therefore it's very important to have a look at, to understand the institutional settings of the country and then to compare them. The comparison can be something showing similarities. The comparison can also be showing something which is dissimilar. Like one thing which comes to my mind showing the dissimilarity is that in the country, one person, one vote. There is a voting. I'm keeping it in red so that red would show dissimilarity. Okay. Whereas in the company, more shares, more votes. That's true. So that make it a little bit unequal. It could be possible that there are 20 people in a company, and each of them have one vote each. So there are 20 votes, but there can be one person in the company who have 40 votes. So then the voting pattern, when they make a decision, then the decision can be influenced by one person because of the ownership rights. On the other hand, you are rich, you are poor, you are educated, less educated, whosoever you are, anyone who have the voting right, one person. Have you seen in a country where people are casting more votes because they are some privileged people, they have some special rights? I don't think so. Then it's not democracy. Mm-hmm. So before you go in the calculation part, before you try to do those formulation, it's very important to have a feel of a company. Smell the company, smell its institutional structure. And if you just learn it, if you just memorize it, it will not be a good idea. Then it's good that you can compare something similar or dissimilar with the state, republic, country, like we have different forms of democracies. If you compare the democracy of Britain, it's not same as the democracy of US. If you look at the democracies and the non-democracies, but there are some countries in the world where there's a one-party democracy. There's no opposition. There can be some companies where there is no real distinction between executive and non-executive. Or if there are non-executive, they are just cornered. They have no rights and they have no say. In some companies, the non-executives can be very vocal. They can speak their mind. They can call spade a spade. But in some companies, the non-executive directors are so much harassed by the executive directors that these people have no capacity, no power to check the wrongdoings of executive board of directors. So these people almost have a free walk, no check, no balances. In some companies, it's mandatory. Similarly, if you come from a state which is an autocracy, where there is some empire or some dictator, then the things are very different. And similarly, you can have one-man show in the company also, that the person is so powerful that nobody can dare to challenge him or her in the decision making of the company, because the person is so indispensable or so powerful. Yeah. Let me see. So we carry on now. And some of the basic terms I want to discuss with you about the corporations, the companies, and that is they have transactions. Transactions is any business activity that is called a transaction. When a company is buying raw material, it's a transaction. When it pays wages to its worker, it's a transaction. When it sends its employees abroad for some training, it's a transaction. When it sells its products, it's a transaction. So transaction is anything which is involving give and take. Give and take for some financial basis. So there is some money involved in it. So you buy, you sell, you buy, you pay, you sell, you earn. So whenever there is some monetary involvement of exchanging of goods and services, that is called a transaction. It's a quite simple thing. It can be a cash transaction. It could be a credit transaction. The cash transaction is that you sell something at your till point, and immediately the buyer is paying you either hard cash, the paper notes, or using the credit card or the debit card, and the transaction is met. By credit transaction, we mean that you buy something now, but the payment would be made after a time period, after a gap of time. Okay. Whenever you take some apartment on rent, many times rather, you are made to make a payment in the beginning of the rent, that you, in the beginning of the month, you pay the rent and then you live, so you pay in advance. But it can also happen that you make an agreement with the landlord that, can I make you payment, the rental payment at the end of the month? So there is a credit transaction in a way, because from the day 1, day 2, day 3, you're living there, but you haven't paid it. You paid only on the 30th day or the 31st day. Similarly, if you look, for example, the beef don't sell all, they can sell millions of gallons of oil, barrels, and whatever is a measure of oil. It's not possible that their corporate customers make the payment immediately. I mean, if somebody is buying the crude oil from Saudi Arabia, then nobody will make a payment immediately at the till point. So it could be possible that the payment can reach after a year or so and so on. So there is always some time lag, time gap between the occurrence of a transaction and the arrival of the payment. And then if that is the case, then we call it a credit transaction. In the cash transaction, the movement of goods and services and the payment is instantaneous, is immediate, on the spot. Okay. Now I use the word goods and services. I should be very clear that in the businesses, the word goods is used for purchase and for sales. If you buy goods, it's a purchase. If you sell goods, it's a sales. But the question is, what is purchase and what is sales? I'll give you an example. Imagine you are running a store selling furniture. Okay, and let's say that you don't manufacture furniture, but you only do some finishing, polishing, and then selling it. Then the word purchase would be used for all the raw, semi-made structure of table and chair which you get. That is called purchase. The goods purchased. And then you do the finishing, polishing, and then you sell it. It will be called goods sold. But remember, if you are the oil company, if you are a furniture company, and you are buying some trolley, you know the trolleys, that will not be called a purchase. You know why? Because selling trolley is not your main business. Your main business is to sell furniture. So you would use the phrase goods sold only if it is selling of furniture. And to make this sales happen, what do you need? You need to buy the raw tables and stools and chairs and the beds. That is called the purchase, the goods purchased. If you buy or sell something other than your main core business, then you can never use the word purchase and sales. Am I right? Imagine the name of the company is Finnair, and they are buying gasoline from BP. Would they call it purchase or not?
I think I would.
It would, because without gasoline, the service, remember Finnair is not a Boeing. They don't manufacture airline, the what do you call as it, the aircraft. They are providing a service. So when you're buying the ticket, it means that at that time, Finnair is selling its service. But if Finnair has some additional, suddenly some controller of Finnair realized that, hey, we have some extra furniture at our airports, and can we sell it in the second-hand junk market? And they sell it. Obviously, they get some money. It will not be called sales of thin air. It's not a sales. It's not goods sold. It's something else. It's some additional revenue. It's some other revenue. Do you get my point? So the word bought, purchase, and then on the other side, the word sales or sold are only applied to your main business activities. If you are Microsoft and you buy a building, would you call it purchase?
No.
No. But if you are a real estate company like Wimpy, who make these very expensive holiday homes, would you call it purchase?
Yes.
Yes. And when you sell the house, it's a good sold, but only for the housing construction company. If Microsoft finds that, you know what, we have a building which nobody is using now, so can we sell it? We have some additional property. Should we just sell it? We bought an apartment so that the people can stay, and if they visit us, instead of staying in hotel, they can go and stay in that apartment because it's so close to the headquarters. Now, because of COVID-19, people are not visiting us, and we are having a good price for this property. Let's sell it. That will not be called sales of Microsoft, because Microsoft's business is not to sell property. So remember that the word goods is only used if you are buying or selling of something which is related to your core main business. Make sense?
Yes.
Yeah. And needless to say that the services, goods are physical, goods are, they have the physical shape and the property, and the services are intangible. So it goes without saying. Then comes profit. What is profit? Mm-hmm.
The advantage which is given by which is received by the entrepreneur while he counts like all the costs, yeah, and the total revenue which is given to the company. So like it's revenue minus costs.
Okay, so it's an excess of revenue minus expenses, right?
Yeah.
So for example, if you are a furniture making company, all the wood, all the things you buy, that's your purchase, and then you hire the labor, the labor work, and you pay them wages, and then you have a factory. For the factory, you need a building. It means you pay the rent. To run the factory, you also need electricity, not just to switch on the lights and stuff, but also to run the machines. Okay, so these are all expenses, right? You also pay some taxes, by the way. If you don't pay taxes, you will not be able to buy the wood. And if the wood is coming from abroad, you also pay custom duty, right?
Yeah.
Yes. And then you are selling your ready furniture, and that's the revenue. Okay, so the revenue minus expenses is called profit. Am I right, sir?
Yep.
Okay. The same way, if you are KPMG and you are providing the auditing services, then all the money which your clients pay you because you provide them the service is your revenue. And from this revenue, you minus the very hefty pay you pay to your staff and all the expenses, transportation expenses, so on and so forth. You minus it, and that is called profit. What is gain then? What is the difference between profit and a gain? or are they synonyms?
It's something not related to the main core of business of the company, which is kind of advantage of the company, but it cannot be structured as a main core of business of this certain company.
Yeah. You are Finnair. You provide your aviation services to the clients. That's a revenue, the money you get. And from there, you subtract all the expenses. And let's say the revenue minus expenses, some positive value. There's more revenue than expenses. This is the Finnair's profit. But imagine, Finnair has also invested in Nokia stocks, the shares, and they bought Nokia share for 10 euros. And now they're selling those shares for 20 euros in the market, and they are making a 10 euro extra surplus. That is not the profit. That is not the profit. That is a gain of Nokia. Finnair. Because that is some kind of windfall thing, something not your main business activity, but just because you have some property, and that property you bought cheaper, and now it's more expensive, you sell it, you make money. Remember, shares are also property, so it's like asset. Gain. Similarly, if your revenue is less and the expenses are more, then you have the loss. Interestingly, the word loss does not distinguish between your main business or your additional activities. So for example, I told just now that there is a difference between profit and gain. Okay, the profit comes from your core business activities. The gain comes from, it's like a windfall gain. It's some good news, something good for you, but it's not your main business activity. But there's no such distinction between the losses. Loss is a loss. It comes from whichever activity, operating, non-operating, core business, additional business. No distinction between the two. Right? Profits and losses.
I'm sorry, one question. So it's kind of no distinction between loss. So it's can be both to no operating activities and operating activities of a firm. So losses can be applied for everything. Like if company loses something.
Yes.
Okay.
So for example, you are Finnair and you are providing your aviation services. You earn in the whole year, you earn 10 euros, but your expenses are 12 euros. It's a loss of 2 euros from the business, from the operational activities. But Finnair also have the shares of Nokia. And when they bought the shares, it was for 3 euros, but now the share is selling for 1 euro. And Finnair have no choice. Just imagine, they say that the price can go even down. Let's get rid of this. And they sell the Nokia shares for 2 euro loss. Then 2 euro from the business activities and the 2 euro from the non-business activities. So both will be called as losses. So altogether, the loss would be 4 euros. So the loss can come from your operational and the non-operational activities both. We use the same phrase, just a matter of name. We just distinguish between the two words. If it is a good news, the profit and the gain. But if it's a bad news, from both sides, business side and the non-business side, we call it loss. And profits and losses are both shown in the company's income statement. I'll show you that income statement is where we are keeping the progress. Your regular progress of the company is shown by the income statement. The income statement shows the yearly progress of the company in terms of its profitability. Okay? If the company is successful in a year, it's profitable. If a company is not successful, then it has losses. Okay? But I want to bring you to this thing first. Can you see here? This is a screenshot I took from the BP, British Petroleum. And this is the regular layout of the company's income statement. And you can see that there are 3 years compared. So whenever you open the income statement, generally it's of 3 years. So the current year and the previous and the previous. Because it's 21, in 21, you will be seeing the data. The latest data year will be 2020. So there's always a gap of 1 year when the reports are published. But that's a technical thing because the ministry and so many people are involved in signing and approving it. But anyways, in this case, we have the latest year is 2019, but there's always 2 more years for comparison. Look at here. Sales and other operating activity, operating revenue. BP is an oil company. BP sells oil, the petroleum, not just petrol, but also the petrol-made goods as well, like the mobile oil and all those engine oils and stuff like that. They sell by 2 ways. They sell through their own gas stations, but they also sell through their direct export to the other countries. So they are selling goods to the customers through their own outlets, but also through the other suppliers, which are based in different countries. I think BP has operations in over 100 countries in the world. And by the way, even their small cafe they have in their gas station is also their operating activity because this is how they operate. Then they, okay, how much money is this? My. It's in dollar million. So it's $278,397 million they have earned in 2019. But then that is not the only revenue they get. They also have the earnings from joint ventures. Yeah? You know what is joint venture?
Not really.
Mm-hmm. The joint venture is when you are jointly having a project. For example, BP has a project in Azerbaijan or in Kazakhstan with some local company of those countries. So it's not the fully owned operation of BP, but they are doing some collaboration. And from that collaborated business, they have some revenue, which both Azerbaijan company and BP, they share. Generally, when we use the word joint venture, it's nearly 50-50. Yeah? Yanni? So that money is also coming. It's not coming directly from BP per se, but it belongs to BP and it is coming from operations. They have some joint ventures abroad.
Can we name it kind of a franchise, like?
Yeah, you can call
kind
it
of franchise.
Yeah. You know what? It's not a franchise. In joint venture, both companies are actively involved. But when you take a franchise, then the company which sells you the franchise, they are not directly involved in it. They only give you their name to use. Did you get my point?
Yeah, I know what you mean. It's kind of a minor, like.
When we use the word joint venture, then there's a very active involvement of 2 or more parties because the joint venture can be between several parties. So in the joint ventures, there is more active involvement of the company. Let's say both BP and this Azerbaijani company, they are exploring some new oil wells together, and it's successful. The business went very well, and they made profit. And it is after interest and tax, remember, because the tax has been paid in that country already. So it will not be, so they have paid the due taxes there as well. Just a sec, I want to, sorry, I'm back. There was some question. Yeah. And then same way, there can be earning from associates. Have you heard this word associates?
Yes. Sorry, I didn't hear you. I didn't hear your question.
What is associate?
I don't know.
Associate is, hey, we use the words. I think it's time I should tell you that when your company and another company has almost 50-50 stakes, we call it joint venture. If your company is about 60%, 70%, 80%, and the other company is share is down, then we call that company, the other company, as affiliate. 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 If your company has lesser share than your partner company, then you call it then you call them as associate. Yeah. And if your company is owning 100% of a company in other country, then we call it fully owned subsidiary. Are you with me?
Yes.
So if there is a 50-50, nearly 50-50, nobody's mathematically measuring it, then we call it a joint venture. If your share is disproportionately more than the other company, then this is more like a affiliate relationship. Then that company is your affiliate. But if your share is less, then it's an associate. But if you own a company, let's say BP is owning a company in Malaysia 100%, then that Malaysian company would be called as a subsidiary of BP. So depending upon the percentage, the ratio of ownership, you can create these different words: affiliate, joint venture, what was it? Associate, and subsidiary. Subsidiary are normally 100% owned. That some company, let's say Finnair, fly to Thailand, and Finnair finds that, you know what, I think there's a local company, all the passengers, they get down in Thailand, and from Thailand they fly from a small company to Pattaya and all those exotic beaches. In that case, Finnair can also buy a local Thai airline company which fly from Bangkok to the other small but very exotic destinations. Now, depending upon the share of Finnair, if Finnair is having 50-50 relationship with this local airline company in Thailand, it's a joint venture. If Finnair is having 75% almost, then it's a affiliate relationship. If Finnair is only owning 20-30%, then it's an associate relationship. And if Finnair is owning 100% of this local flying company, it may not be called Finnair, it can be some other name. Then it can be called as a subsidiary. Many times it happens. You fly from any other parts from Europe to Helsinki, there is an announcement that we have the partner airlines. So we welcome our passengers who are flying from Birmingham to Helsinki, but we also welcome our passengers from our partner airlines who are further flying to Tokyo or some other parts. So then it's a relationship which could be in the form of affiliate, joint venture, or associates.
Shab, I'm sorry for interrupting. I got a question.
Mm-hmm.
Could you please explain one more time what is a subsidiary?
Subsidiary.
Yep.
Imagine. Yeah, I'm coming. Imagine that we talk about Finnair, okay? It flies to Bangkok, Helsinki, Bangkok. And in Bangkok, when the passengers get down, they, of course, they see Bangkok, but they also want to go to some other parts of Thailand. And maybe they need some local flights, the small carriers who fly from Bangkok to some small places. If Finnair is 100% owning those small airline companies, or nearly 100%, but the other company has very small share into it, not 50-50, not 60-40, not 70-30, not 80-20, but very less share the other company has. Then that company would be called as a subsidiary of Finnair. And if Finnair is having exactly 100% ownership of this small airline company, which fly from Bangkok to Pattaya or some other beaches, that's only beach I know other than. Yeah. So in that case, that company would be called as a wholly or fully owned subsidiary of Finnair, even though the name of that flight carrier will not be Finnair because it's registered under some other name. Make sense?
Is it kind of a daughter company?
Yeah, you can call it if you want to use this name. Yeah. Ivan?
Yes, Sean, thank you very much. Now I got it. Thank you.
And then you see that, and you can see that there is a comparison. So you can see that the main business revenue, which comes directly from the operations of BP, has been rising in the last 3 years. And by the way, there's a word called note. Note means if you want to see more details about these activities and these revenue, go to the footnote 5. They're not called footnote, they are called explanatory notes. Yeah, explanatory notes, which are when your statements are over, I'll show you. There's note 1, note 2, there can be hundreds of notes. Because in the accounting statement, you just show the condensed data. You can't show the breakup, you can't show the decomposition, you can't show the characteristics. So in that case, we only show the totaled aggregated figures. But if you're interested to know, for example, that which product of BP is getting more revenue, is it the oil as such, or is it the brake oil, then go to note number 5. If you want to know that is more revenue coming from Europe or Africa or Asia, then go to note number 5. So if you want to get more detailed information, go to that respective note. The earnings from joint ventures, even though it has gone down, but the earnings coming from associates been going up, like almost doubled in the last 2 years. Okay. Similarly, BP invest in some. BP must be having its bank accounts. It must be have got some deposits. And when you are, or BP must have lent to some other oil company or any company. Let's say BP has lent money to, say, Shell. Then Shell would be paying interest to BP, which become BP's income, or some other income. Like, for example, they have some partnership, not in the oil business, but in some hotel. Let's say BP says, you know what, there are some nice hotels or some holiday resort. So they can also become partner. It's in Colombia, so they can buy some hotel in Colombia or some resort in Bahamas. And that also they get some income from, but that is not the main business. Remember that is they can call it other income, but it will not be called as a main revenue. You can say, so the revenue is more from your direct operations. But this other income is something related, something similar, but you can't call it a core business. Okay, and then come the word gain. Look, Here is the word gain. Not the revenue, not the earning, not the profit, but the word is gain. Gain on sale of businesses and fixed assets. There are some businesses which BP no longer wants. BP has some of its gas station in Indonesia, which they don't want to run, and they find a buyer in Indonesia. There's an Australian company. They want to buy the BP's gas station in Jakarta, and they sell it. And on this sale of business, they have a profit. They have a gain. So I won't call it profit. See, I was about to say profit, or I said actually. Okay. So when they find the total worth of their gas stations in Indonesia, it comes to be 100 million. But they find a buyer, and the buyer gives them $120 million, and they make a gain of 120. Yeah, it could be a loss. So if it is if this value is 100, but they get 80, then it would have been still as a loss. So loss doesn't distinguish between business activities or non-business activities. Yeah. And when you add all these revenues, all the money which comes to the company, we call it total revenue and other income. And you can see that even though the operational income is almost down. So I think it's a little bit overall. 2017 was not 2018 was better year in comparison to 17, but 2019 is not a good year in comparison to 2018. Any question from the revenue of the company side, the revenue side?
Well, actually, is there some kind of a rules how detailed you have to be in the income statement? Because in my logical sense, I would just put together, joint ventures and associates as a joint cooperations or something like that. Yeah. And if you want to know a little bit more, you can always check the notes. But
exactly,
is there some kind of a rules?
Well, first of all, the rules vary from country to country. Yeah. See, Janne, you raised a very important point. What is the first name of? What is the full form of BP? What is the first name? What does B stand for?
British, isn't it?
British. The company is incorporated in Great Britain.
Yeah.
But look at this sign.
Yeah, it's in dollars.
In dollars. You know why? Because BP is listed in UK, of course, but BP is also listed in New York Stock Exchange.
Yeah.
Okay. But here I'm picking up that part which is about the New York Stock Exchange. So I'm measuring the BP's performance from the American, listing requirements. Maybe the American rule says that you have to show these kind of bifurcation of the activities. But if I see BP's income statement as suggested by London Stock Exchange, then they might have different set of rules.
Oh yeah.
So how does the layout of the income statement look like? It depends upon your national regulations. Even though we used to, we still have GAAP, generally accepted accounting principles, and now mostly the countries are going to IFRS, International Financial Regulatory System, okay, which says that there should be one common thing. But I would say that when you guys choose your companies for the group task or for the individual assignment, you will pick up one company, each of you, either as a group or as an individual, and you will see that not every company's statement would look like this. Principally, they would be same. I mean, you can't say that profit minus revenue is asset. You can't say it. Profit minus expenses is always a loss. So the theory would be same, but how the layout, how they are calculated, how this data appear to be, that would be very different.
And I can easily imagine that.
Sorry?
Yeah, I was just going to say that I can easily imagine that the different regulation between the countries might lead, in that kind of case that in some other country, you might be counting something as a gain, and in another country, it might be in totally different, category. Isn't that so?
Yeah. But you know what? Gain is called gain. I mean, if nobody would say that I mean, the gain is always representing non-business activities. So, for example, if you are Finnair and you are listed in Australia, even there, your main revenue minus expenses will not be called gain. It will still be a profit. It can be profit, it could be earning, it could be income, but it will definitely not be the gain. Gain is always used for the extra additional activities. Something in the periphery, something supplementary, but not the main business.
All right.
But how they look like, you're right. They could have clubbed all these other things in a different category, right? That is possible.
I would do so.
That is possible. That is possible. Look, it's not just the country's law involved. There is accounting rules which are different from the corporate rules. Accounting rules are different. The legal system is different. And then there is for example, association of auditors. They follow different rules. If you are a multinational companies and you want to aggregate all your activities together, then you follow different rules. So the regulatory system which the companies go through, if you are a big company, if you are a small company based in Jyväskylä, all the operations in Finland, it's much more easy to show your statements. But if you are Coke, Pepsi, which have operations almost every country in the world, basically, then it's very difficult for you to have a consolidated statement when you can club all the incomes from everywhere and put it together, because you are dealing with hundreds of legal systems. Yeah.
Oh yeah, it's really complex system with
It's
big
very
corporations.
Complex. It is very complex, yeah. But anyway, I would recommend you that once you pick up your company for the whole group or for the individual, go through your company's financial statements. And if you have any problem in understanding the word, phrase, come to me. Don't wait till the end. I have had one very bad experience a few years ago when the group started preparing their first assignment 2 or 3 days before, because they were so happy during the lecture, because hey, it's a cakewalk. It's so easy. Just do this, and that's it. But when they opened their statement, they were almost unconscious because the word, the phrases, the layout, the structure of the statements was so different from what I was doing in the classroom. Theory was same, logic was same, principles were same, but when they are doing those calculations, when they're operating them, that is a very different thing. So make sure that once you pick up the company, first of all, get familiar with the income statement and all other statements of your company ASAP. So are you guys okay with this today?
Yes.
So I want that every concept that I discussed with you, it should be in the context of some real case company. And today it was not my decision until today. I would explain all the concepts, terms, phrases in the context of BP, British Petroleum. Okay, so please don't pick up BP as a case company. I don't want to make your life so easy. I want to make your life easy, but not so easy. So when you pick up the company, of course, I would inform you through my discussion forum message. Make sure that nobody picks up British Petroleum. I would write it in the message that don't pick up BP. Any other company, but not BP. So I think that's it for today. And
we can find the bank income statements from the official websites, right? Or do we need? Yeah, okay.
I tell you something, the best way to search the income statement of any company is that don't go to the company's website. Just Google annual report of, let's say, Apple 2019-20 something. And don't put 21. Don't put 21 because it's not available yet.
Okay.
Generally, for each year, the new reports come around August, September. And the new report means in 2021, the new report would be 2020. Make sense?
Yes.
Yeah. First of all, 21 is not complete yet, so you can't have 21, definitely not. And even the 2020 may not be available before August this year for most of the companies in the world. It depends upon country to country, but the big companies, the US companies, it's very hard to find before August. So I think the most recent data you can get is from 2019. But 2019, you just, the way I did, I just Googled BP financial, BP annual report 2020. And then you will find some link where you can download it from. Okay, and this could be a couple of hundreds of pages. So, but you don't need to read all the pages. We'll just focus on the financial statements, which is almost in the middle of the report somewhere, you know. Yeah, but wait for my message. I would be sending you a message in a day or two where I would be explaining to you that which company you should pick and which one you shouldn't. But please, 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 very important thing. I'm giving you very clear signal, not signal, but clear warning that even when you pick up a company which you want to analyze in this course, and keep, by the way, if you are a same group for assignment 1, same group for assignment 2, keep the same company for both assignments so that you can have more in-depth analysis of the company. But that's a secondary question at the moment. When you pick up a company and I approve it, the first thing you do is that you should be familiar with the words, terms, phrases that the company is using. Okay? If you are not, then it can be a bit of challenge, okay? So please make sure that you go through it. Any questions, comments?
May I ask a question about the last part here, the earnings per share topic, and per ordinary share, in sense they are basic and diluted. So what does it mean diluted? Because in my mind it's something like unclear or maybe faded.
Stefania, you asking me a very difficult question. What if I say I don't know? Would you find?
Just I don't know too.
No, I know it. I know it. You asked me a question which I was going to answer anyway next time, but I would answer now because you asked me. In any company, there are two types of shareholders. The one shareholder category is who have the voting rights. You know what I mean by voting rights?
Yes.
Yep.
Voting rights means based on the number of shares you can vote. Let's say I own 10 shares, I have 10 votes. Shiny has 20 votes, she can 20 shares, she can have 20 votes. It means that through our voting system, we can control the company, right? The word is controlling. So the share we own are controlling shares. So controlling means we can, because when you can vote against, you can vote in favor, you can influence the decisions of the company. So it means that those votes have the controlling rights. Oh no, sorry about it. I should have switched it off. So the shares have voting rights, controlling rights. But now, you know what? I talk to when I buy my shares, I discuss with my financial advisor that, Mr. Advisor, I want to buy BP's shares, but I don't want to have the voting rights. I don't want to voting rights. But instead, give me some compensation additional that I give up. I surrender my voting rights, but can I get some extra compensation for it? And then he advised me that if you buy the B category of shares, because when they issue shares, there is some category of shares. One category carry the voting rights, Okay. But if I say that I don't want voting rights, I'm not interested in the voting rights. I'm not interested at all. But instead, compensation me in some other way. Then he would say, all right, you can buy these kind of shares. Here, the profit is marginally more. The earnings can be marginally more. But in turn, Shab, you have to give up, you have to surrender the voting rights. If I surrender those voting rights, it means I have no control over the company. Those shares are called non-controlling shares. And you can see that the total shares are, the profit. Look, the total profit of the company is about $4 billion, right? And about mostly 90% of the profit is going to the controlling shareholders. Can you see my cursor?
Yes.
These are basically those shareholders who have the voting rights, and the voting rights shareholders are almost 95%, 99% of the total. Very few, 1 or 2% shareholders are having the non-controlling voting rights. And you can see that 164 is just peanuts, maybe 1 or 2% of the whole share ownerships. But they are marginally, they are present in the company. Okay? So majority, not just majority, but massive share ownership would be the ordinary shareholders. We call them ordinary shareholders. We call them equity shareholders. We can call them the common shareholders, or we can call them controlling shareholders. They could be 95% or even above. But a tiny minority would be those people who don't want to have the voting rights, but instead they take some additional compensation from the company. They are called non-controlling interests. Yeah. We call them non-controlling shareholders, or we call them preference shareholders. Preference. So it means in the profits, they are given a little bit of more preference than the common shareholders, but to get this preference, they have to give up their voting rights. Yeah.
So do you mean that the shareholders, which are the majority of them, they are buying privileged shares? So remember correctly, privileged shares give you a chance to vote and participate in shareholders gathering.
Generally, the overwhelming majority of the shareholders are interested in voting. I mean, if they are not interested in voting, then they should give loan to the company rather than investing in the shares. So why do they buy shares if they have no interest in controlling the company through votes? But there may be some very small minority who say that, hey, I don't think we are so interested in voting. So that is why they give up their controlling rights. So we can call them non-controlling interest. But these are the ordinary, common, equity shareholders, stockholders, whatever you call them, who have the voting rights, and hence they are the controlling shareholders. Because the common sense says that if you don't want to control the company, why do you buy the shares? And if you don't want to control the company, then invest in some other way. And the best way is to give loan to the company, not the. But I'll explain more about it when we meet next time. Yeah. But do you have any other idea, Stefania?
I just thinking about that maybe people buy non-controlling interests, so these shares that maybe they are not sure that their decision on their vote would be right, so they just want to gain income anyway, so they don't want to take responsibility for their decisions.
Excellent. And there's one more reason why I would be interested in buying non-controlling shares. I tell you something. Let's say I buy the BP shares, and I buy the non-controlling share. You know why do I buy? Because I don't want to stick with the company for a long time. So I'm investing today, and I'm definitely prepared to sell. I buy today and sell in 1 month time. And the voting will be held after 6 months. So then there is no point of buying the shares with the voting rights. So if my time window, if my time horizon to stay with the company is very small, then I may be interested to buy non-controlling voting rights shares. But if I want to stay with the company, I want to be, I basically create some kind of my financial relationship with the company over many, many, many years. Then I think it will be totally foolish on my part if I buy non-controlling shareholders shares. Yeah.
Yeah, that makes sense.
Yeah, but I would say that you should do some more. Just Google, just search preference share capital or the preference share, or just get non-controlling interest shares. Just check, you will get description. And invariably they would say from some web source that non-controlling shares do not carry the voting rights. It's like you're living in a country and you give up your right to vote. You say that, hey, I'm a citizen of the country, but I don't want voting. I'm not interested.
But actually, I think quite many people would go with that, Chad. Think about it. If a government would be saying that, okay, you don't have the vote, but you will pay less taxes for it. So I think even now the people are not voting so much. We get maybe 60-70% of the.
But Yanni, I tell you something. It's not the choice of investors to buy this category of shares. It is a choice of the company to issue.
Yeah.
If BP says that, hey, you know what? Last year we were issuing 2% non-controlling and 98% ordinary shares. But next year, no non-controlling shares. We are absolutely going to eliminate this category. Then nobody can protest. Nobody can raise any objection, because it is not the choice of the buyer, of the shareholders, that how many non-controlling shares they want to buy. But it is a choice of the company to issue. Tomorrow, for next year, they can increase this ratio to 5%, 6%, 10%, but maybe next year they make it 0%. So it is the prerogative of the company to issue these shares at all or not, or what proportion. So it is not the choice of investors. Once investors know, oh yes, this company also issues non-controlling, and I'm not going to stay with the company for a long time, then they can apply, they may get, they may not get.
What is the reason behind with the companies to issue non-controlling shares? Why would they do that? If I would be a big company, I would like to have like all the shareholders to have a vote and tell what way I should take the corporation.
Why would politicians like to, I mean, they will not do it. Do you think that the politician would like to defranchise certain people in the country?
But I think politicians might be a little bit different from the.
No. I'm just asking you a question. Is any motivation for the politicians in a country to defranchise a certain section or certain people in a country?
There might be.
What could be the reason?
They might not like their, thoughts and ideas.
Absolutely. So there could be a possibility that when there's always a possibility that the company feels that there's always 1 or 2% votes which can go this way or that way to make a decision which can go against us. So in that case, and who's thinking this thing? the executive directors, CEO of the company, CFO, these top notch leaders of the company, they say that, hey, it's always that a decision that goes against us is by 1 to 2% margin, and we know that which shareholders they are. Let's eliminate those shares out of the treasury, and let's call them non-controlling shareholders, non-controlling shares. Let's experiment with that.
That sounds cruel.
Yeah. So just imagine that in a country, the government in power knows that, you know what, this region, we're not going to win at all. So let's defranchise all those people.
Yeah, it's like Jyväskylä. We don't have to listen to Jyväskylä at all.
Yeah, but I tell you something. No, on a serious note. Well, this was also serious note, but on another note, I can tell you something else. There is a theory. Stefania is here because she raised this point. Okay, there's a theory called pecking order theory. Pecking order is that, let's say, the company's revenue is 100 and the expenses are 70. The profit is 30. Yeah. From this 30 profit, the company would pay. You know, it's like a who takes the who takes the flesh first from the dead animal. The profit is 30. The state says, the state where the company is registered, say that, hey, you know what? I can't compromise taxes. I have to collect taxes from you. Give me 10. From 30 minus 10 taxes, 20 left. And then the rule says that you must pay the salaries of your staff first before you distribute this profit with anybody else. And it is found that the company owes 15 to its 15 to its salaries, their pension, you know, all the things which they have been adding up. And then from 20, 15 is given. What is left? 5. And then the people who have given lending to the, you know, not lending, you know, when you borrow, when the company borrow from people or the banks and people, the company owes to banks and people from whom it took loan is 3. And then from 5 minus 3, 2 profit is left. And then there are 2 categories of investors. The first category is called preference shareholders, the non-controlling shareholders, and the second category of people is the common ordinary shareholders. From this 2 remaining leftover, who would get first? Who would be served first?
Preference one.
The preference one. You know why they would be served first? Because they have given up the voting rights. And it could be possible that nothing is left afterwards. It could be possible that from 2, all the 2 leftover goes to the non-controlling shareholders, and nothing is left for the ordinary, the common shareholders. It is because the preference shareholders gave up an important right, and that right is right to vote. And because they gave up this right, in turn, they got a privilege that whenever the profit would be distributed, they would be standing ahead of the ordinary shareholders in the queue. That is why we use the word pecking order. So you peck, you know, so the company is pecking. Who pecks first from the profit? The state. Who pecks first, second? The employees, and depending upon whosoever. And then finally, 2 people are left. The people who give loan to the company, the debt holders, and those who are investing in the shares. From shareholder and debt holder, who pecks first? Debt holders. And then whatever is left goes to the shareholders. But even between shareholders, who pecks first? The non-controlling. because the non-controlling have the preference to stand in the queue ahead of the ordinary shareholders because they gave up the right. Come on, mate. They have no right to vote. So you have a choice. But once again, if you want to become a controlling shareholder or non-controlling shareholder, it's not your choice. You can't force company to convert your controlling to non-controlling. No. Pick up from the available shares. And generally, as I said, that 98% of the shares are ordinary with controlling interests. And very, very tiny, meany, proportion is this. And in many companies, when you pick up for your group work or for your individual assignment, you will find that this non-controlling thing is missing altogether. They don't have. It's their wish. Come on. Look at the size of BP. How can you force the company to issue non-controlling shares? It's their wish. They want. Yeah. But I think we should stop now because many people have run away. And I would be sharing this recording with you. And then we can, please remind me, Stefania or Yane, we will continue from this point next time. And meet on Monday.
Okay.
Yeah. Okay. Thank you so much for this very interesting discussion, for raising this point.